Yeah, why don't we just jump right into C Club? So, for anyone listening who isn't already familiar, what is C Club and how did it get started?
So C Club is a network, and we run accelerators and a bunch of other community-focused experiences. The core is our accelerator. So we are structured as a DAO. And along with our community, sort of source and select and support teams who are building hopefully the next big consumer crypto project. Its founding, the sort of meta was around social tokens, and there was a lot of, we sort of saw new tools start to emerge that would allow folks who are like myself, incapable of actually putting their ETH into the DAO to actually do interesting things in crypto. It's, Uniswap and Roll, the ability to mint tokens and the ability to gate access to chats, all this sort of stuff, or these fun new primitives that creators were experimenting with as a way of sort of, well, hopefully building something new. And so we were really excited about this. I think this idea of social capital being valuable is, I think, undeniable at this point. And our hope was to find ways to distribute that value or to unlock that value. And I think that an honest take at that moment was one where we said, well, this is interesting, but we have no clue what the exact right thing to go do is. And so this idea of working sort of as an accelerator, incubator, I think we've used those terms interchangeably early on, as a way of sort of getting into the trenches with builders who had an insight or an inspiration in their own way, or pushing at their own edges, and for us to be useful, but also, learn from that. And so C Club sort of emerged from that. We've currently on our sixth batch right now. We've had a big focus on, I guess, the cultural and creative capital, social capital. We've seen that sort of emerge from social tokens and then NFTs and DAOs, and sort of are focused on consumer crypto right now, which we think is like the bundling of all those interesting things up into a bit of a meta category that we think has a unique opportunity in the space right now. Is a ton of infrastructure investment has happened, and now we're in this phase where builders are putting them together in new and interesting ways to, at the very least, push the space forward, but hopefully build some big, valuable, meaningful companies.
Yeah, so there's like the Accelerator, which is focusing on like consumer apps and helping them become successful. And then there's also the C Club Ventures. Could you tell us about these two wings of C Club?
Sure. I think, if you think of C Club as a network that is really harnessing the social capital of a growing number of awesome contributors and token holders, some of the value that emerges from that is this ability to get deal flow and to have insights on the market and to feel confident in being able to be a value add to founders that come through our network. The one thing that we didn't have was capital to invest in those teams, especially in the early days. And so we sort of had all these assets, this value, this deal flow, this sort of excitement and opportunity, but we weren't in a position to invest in that. And the early model within C Club was one where teams were sort of plugging into the C Club DAO, and there was a token swap exchange there. So we would have exposure to their projects, and in return, they would have exposure to ours. And so there's this whole other world of more traditional startup structures that were being built out. And we saw an opportunity to form some capital and an organization that was structured so it could go invest and return capital to its investors. And so C Club Ventures was born probably close to 2 years now. It's about a $30 million fund structured as a venture DAO, and that there are a number of members who are sourcing and sort of voting on deals. Yeah, we've been very active through the bull and through the bear and into the next bull. And I think there's a lot of sort of insights emerging from the two different approaches that we've taken. And I think we'll see those come together at some point in the future.
Yeah, I mean, I think the way that C Club Ventures is approaching VC is really novel because it's bringing together early stage investing with community ownership and like community decision making, which I don't really think these things have like intersected prior to like a crypto context. Like previously that would have been kind of impossible. And I feel like this is a little bit similar to what Juicebox does as a protocol, which is enabling capital formation, but in like a community first way and in a way that can be meaningfully decentralized. So I'm curious if you can tell us like a bit more about why C Club Ventures is structured as a DAO and what this enables you to do versus like a more traditional VC fund.
Like the honest answer is why it's structured as a DAO is because that was the novel opportunity that was in front of us. And I think it was also very on mission for us, looking at new ways to form capital and thinking that there was an opportunity to tap into a network and create more value for our founders because we have, 30, 40, 60 incredible stakeholders in that room as well. I think, we're seeing that sort of category fragment in many ways. There's a bunch of new experiments or at least sort of ongoing experiments around how do you form capital? How do you deploy capital? How do you support? How do you manage that? How do you deal with the free rider problem that exists? And I think it's going to be interesting to see how those sort of morph as the market comes back or as new opportunities emerge. So I think it was the most obvious thing for us structured as a DAO was to launch another DAO. I think the approach we're taking here is that there's a little bit more of a community management approach here than you might have in just pure, capital formation based DAOs, that the work of sort of moving and keeping the gears moving is something that's valuable, somebody driving the heartbeat. And so we've taken a bit more of a active approach there as far as community engagement with our members. And so I think that's a big thing, especially as, I think it's very common in crypto for there to be a ton of interest and excitement around a thing early on. And then as that sort of either opportunity dips or as it gets harder, how do you sort of push through into that next wave? So I think we've sort of saw that happening and kind of built a structure that would allow us to do that. I think there's still a ton of opportunity in like the pure capital formation on-chain groups. I think what Lore's doing and what I guess it's called Party's doing, and clearly what you guys are doing at Juicebox is a very novel approach as well. And it's sort of interesting infrastructure for folks like me or who have an inspiration or an angle on the market in the future to hopefully get access to capital in a way that they wouldn't have been before. I mean, it is shocking to me to be sitting here to say that part of my job is investing. As somebody who 2 years ago, that path was not even remotely clear. And in fact, I don't think I've really embraced that as a core part of my job until, maybe more recent than I should admit. But I think that's a huge opportunity, right? Where there's talent and insight and relationships and access, all these things that kind of go into the factory of a VC fund that I think we can break up and make accessible, hopefully through technology, to more people. And so I love this idea of just a network of networks that are going out, finding great talent, supporting them, bringing capital to bear. And I think the world looks a lot different when you have that type of infrastructure around. And we've seen hints of it, I think, so far in what people are able to do. But I only expect that to get more and more interesting.